So when you're looking to sell a private company, it's very challenging to sort of create a competitive situation where you're able to negotiate the best price. With a public company, the stock is trading on NASDAQ at a certain price, and what you're going to get in selling the company is some premium to that, whether it's 10%, whether it's 40%, but there's a sort of very clear starting point in the value of the company. With a private company, the purchase price you're going to get is much more wide open. Some companies are more established, have a certain level of EBITDA, maybe it's a multiple of that. But other companies, earlier stage companies, it is very speculative. The valuation might be in the technology, might be in agreements or exclusivity arrangements. And so it's challenging to work through that. Obviously, ideally, you get multiple bidders at the same time. And investment bankers are sort of the best way to sort of manage the process, talk to the likely buyers, line up multiple bidders. It's challenging as a private company, even with investment bankers in an industry where there's very clear set of 10, 15, 20 acquirers to go knock on doors. It's still difficult to get those multiple offers to align, although ideally being able to do that, get them to play off each other is the best. Another very common and almost better way that private companies are able to negotiate price is using a potential venture capital or other equity financing as the rationale or as sort of the competitive situation to the buyer. Because if a company's going to raise money from venture capital investors at a $20 million valuation after the deal, as an example, the acquirer knows that the second that deal closes, those new investors are really in it to make at least 3 or 5x on their money. So $20 million, suddenly the second that deal closes, the purchase price for your company becomes a minimum of 60 that you can accept. And the buyers believe that and know it to be true. And so if they're offering 25 million, the time is absolutely now. So that's the way to get them to move and act quickly. Really, with any negotiation, when you're negotiating to sell your company, it all comes down to what's your best available alternative. And if you can have a credible alternative, whether it's another buyer, whether it's doing a financing, whether it's just a standalone, we don't really need you, we can run this business and grow it really big, so you need to take us off the table. But as with any negotiation, having your best available alternative really dictates your negotiating strength.